Investing in stocks, a primer for the young investor. So you're just starting out on your journey into the world of investing. Fear not. Despite the complexity and jargon, at its core, investing is about laying your money down now to get more money back later. Simple, right? And at 22, you've got one brilliant ally on your side: time. How investing in stocks works. Buying a stock is like buying a small slice of a company. As the company makes profits, they might pay you some of these profits in the form of dividends. Other investors might also decide this company is worth more and be willing to buy your slice at a higher price than you paid for it. This is how you can make money through appreciation. How you get paid. Dividends and selling stocks at a higher price than you bought them, capital gains, are the primary ways you get paid with stocks. Dividends are not guaranteed, mind you, but with certain well-established companies they are common. Learning the basics. Frankly, nothing replaces experience. But before you dive in, it's smart to educate yourself. Start with reading, a lot. The Intelligent Investor by Benjamin Graham is the old standby, a hefty tome that remains essential reading for value investors. For a more reader-friendly entrance that covers the mental game of investing, try The Psychology of Money by Morgan Housel. Then there's A Random Walk Down Wall Street by Burton Malkiel, which will introduce you to the idea that beating the market isn't something that everyone can do. This book could lead you down the path of passive investing, i.e., index funds, which are often recommended for their low costs and solid returns over time. Most importantly, get your hands on some practical guides. Investing for Dummies is actually a pretty solid place to start, breaking down basics without making you feel, well, like a dummy. Practical steps. You're going to want to get some skin in the game. Start small, with money you can afford to lose. Sign up for a brokerage account. There's plenty that have no minimums and allow commission-free trading. I won't recommend any specific ones, but you've got options and many resources online to help guide you. Next, consider investing in broad market index funds initially. They diversify your holdings across hundreds, if not thousands, of stocks, which immediately lowers your risk. From there, if individual stock picking interests you, begin to research companies that you find fascinating or believe in. It's also wise to keep tabs on financial news, though take everything you hear with a grain of salt, and try fake trading on paper before you use your hard-earned cash. One more crucial step: learn about tax implications of investing. Taxes can eat into your gains if you're not careful, and at your age, you've got a lovely investment vehicle at your disposal, the Roth IRA. It allows you to invest after-tax money, and your gains grow tax-free. Now, if investing books don't float your boat, there are heaps of blogs, YouTube channels, and podcasts that break down investing concepts in more bite-sized and digestible formats. Some of these are highly educational and can provide a more contemporary and relatable context. Remember, investing is both an art and a science. You'll learn as much from your mistakes as your successes, so don't be too hard on yourself when you stumble. And since you're in Portland, consider balancing that screen time with some refreshing Oregon air. Nature tends to have a calming effect that can be just what you need when the market gets tumultuous. And believe me, it will. Happy investing. Aim for the long run and let compound interest work its magic.